that uneasy feeling in your stomach when the market takes a nosedive. It's not just anxiety, it's a critical volatility warning sign you can't ignore. Many people brush it aside, but that instinctive panic can lead you straight into disaster. Imagine investing in a promising stock, only to see its value plummet overnight. Your immediate reaction: sell everything. However, that knee-jerk response could trap you in a cycle of significant losses. When you see red in your portfolio, your heart races and fear takes over, compelling you to act as if holding on is too risky. This frantic energy is a hidden danger that can seriously undermine your financial stability. This reactive mindset often stems from the fear of losing what you already have, clouding your judgment and leading to mistakes that can haunt your portfolio for years. Reflect on a time you panicked during volatility. Perhaps you sold a stock that later soared. That's the essence of a reactive mindset. It blinds you to potential beyond immediate turmoil. You're not alone in this. Many fall prey to herd mentality, feeling pressured to sell when everyone else does. But what if you chose to sit with that discomfort instead? Recognizing the subtle patterns that lead to hasty decisions is crucial. The solution starts with awareness. Take a deep breath and reflect on your financial goals. Instead of reacting impulsively, respond thoughtfully to the chaos. A reactive money mindset isn't just a mistake, it's a hidden danger that can sabotage your success. So the next time you feel that urge to act, pause. Embrace the uncertainty, let it settle, and watch how your choices can transform the situation. If this resonates with you, take a moment to reflect on your own financial journey. You might just discover a clearer path ahead. Have you ever watched your investments plummet, feeling that sinking sensation in your stomach? You are definitely not alone. Many people react in these situations, but few truly grasp the hidden dangers of a reactive mindset during market volatility. Imagine this: you've spent years building your portfolio, only to see it drop dramatically in just a few days. Your instincts scream at you to sell. But what if that impulse is actually leading you into a trap? Most people don't realize that acting impulsively can be more damaging than the market downturn itself. When fear takes over, logic often flies out the window. You might think you're protecting your money, but you could be jeopardizing your financial future. Take Sarah, for instance. During a market downturn, she panicked and sold everything at a loss, thinking she was avoiding further losses. But she missed the rebound that was just around the corner. Not only did she lose money, but she also lost faith in her investment strategy. Could you be making the same mistake? It's easy to get swept up in chaos when headlines scream doom and gloom. But what if your best option is to stay the course even when it feels impossible? Many investors fall for the myth that they need to react to every market twist and turn, believing that constant adjustments are the only way to survive. In doing so, they often overlook the importance of patience and a solid strategy. Picture being in a crowded room where everyone is shouting advice. The most successful investors are often the quiet, honest ones who take a step back to analyze rather than react. They understand that markets fluctuate and embrace the noise without letting it dictate their decisions. Here's the kicker: every time you act out of fear, you risk missing valuable opportunities. The market rewards those who remain calm. It's not about being right, it's about staying steady when everyone else is losing their heads. As tensions rise, remember that fear is a powerful force. It can cloud your judgment and make you second-guess your strategy. This is just about money, it's about your mindset. The real danger lies in letting volatility dictate your decisions. So, how do you combat this instinct? Start by grounding yourself. Remind yourself of your long-term goals and create a plan that doesn't change with every headline. Before making your next move, take a moment to pause. Ask yourself, am I acting out of fear or am I sticking to my strategy? Trusting your plan is your best defense against market chaos. As you navigate these turbulent waters, reflect on this: the calmest sailors don't let the storm dictate their course. They know it's not about the storm itself, it's about how they respond to it. So as you face the next market shakeup, remember to take a deep breath. Your financial future depends on the choices you make today, not on the noise of tomorrow. And perhaps, just maybe, the best move is to stay put. Keep your eyes on the horizon and ride it out. What if I told you that your mindset could be the biggest threat to your financial future? In a world where market swings feel like a roller coaster, there's something lurking beneath the surface that could catch you off guard. Many believe they can navigate volatility with quick reactions, but acting impulsively can lead you into a trap you never saw coming. It's like being in a high-stakes game where every misstep can cost you dearly. Are you ready to uncover the hidden dangers of a reactive money mindset during these turbulent times? Imagine this: you hear about a sudden market drop, and your instinct is to sell everything to minimize losses. Sounds smart, right? But what if that's exactly what the market is anticipating? Many investors fall into this cycle driven by fear rather than strategy. There's more to consider. Let's think about the average day trader. Fire glued to their screens watching numbers fluctuate, yet in all that chaos, they often miss the bigger picture. It's not just about the stock price, it's about understanding the underlying currents. Imagine being so focused on the immediate that you lose sight of the horizon. Now let's dive deeper into what happens when the market gets shaky. Each fluctuation can send shockwaves. You might feel the urge to jump in or out based on fleeting news, but isn't that just playing into the hands of market manipulators? Consider the story of a successful investor who panicked during a downturn. They sold at the lowest point, only to watch the market rebound just days later. Can you relate to that moment? The regret, the what-ifs? It's a familiar tale, yet so many still fall victim to it. Picture yourself standing at the edge of a cliff. Your instinct is to back away, right? But what if the real opportunity lies in understanding the storm instead of fleeing from it? The key is to stay grounded, analyze the situation, and think critically. So, how do you navigate this turbulent sea? It starts with changing your perspective. Instead of reacting, embrace a mindset of observation. Think long-term terms and let market fluctuations become a natural part of your journey.